Hi everyone, this is Bag of Dawn at StockMarketCaddy.com. It is about 9 p.m. on February 6th, and I want to review with you the four major markets: the Dow Industrial, the S&P, the Russell, and the NASDAQ. And I want to do it using something that you may not be that familiar with called point and figure. Now, we trade point and figure, and we also have very sophisticated algorithmic trading systems that we trade day in and day out. We showcase those systems. If you're interested, every Sunday night we'll give you a setup of the overall markets, and we post that video generally between 7 and 9 o'clock every Sunday evening. But we also use the old standby point and figure. And folks, I personally think that everybody should start with point and figure. It is so simple but so precise. And we're proponents of everything else, but I think because of technology, everyone has gotten away from some of the basics, and they may not fully understand all of the other stuff that they're using, and they're looking to these other folks, and I just think this is huge. I really do. And I can't, in a 10-minute video, show you everything that we know. I will say this: we have no affiliation with him, but a Mr. Dorsey has a great book on Amazon. I think it's about $60 to $70. It's in our library. I recommend that you buy it. But if you don't, I suppose you could save a couple of bucks and go to the library and get it. But I think it should be in everyone's reference. We also ourselves, if you come to our website, we have we advertise a 90-minute DVD, but it's closer to 2 hours, on how we use point and figure. We can get that DVD to you within about 48 hours, thereabouts. We ship it out. If we get the order before 4 o'clock, it goes out that day. And if you direct message us, you call us, I'll talk to you. Happy to. We're all about teaching here. And let me show you what we're looking at as an example. Here is the Dow Industrial Average, the diamonds. On a point and figure chart, what is nice about a point and figure is that it doesn't use anything else. I can tell you what the dates are. This is this is January. This is January of last year. This is July. This is June. This is May. But it's yet not a linear chart. Time is relative. And point and figure charts don't use time. Volume is relative. You can put volume on a point and figure chart. We don't. Volume is relative. MACDs, relative. Averages, relative. Price, the final arbiter. That's all it has. It's either going up or it's going down. So let's look at the diamonds. The diamonds had what we call a high pull warning. On the reversal, we began to short. We expected a support level of around 154. We're not really concerned with the noise tomorrow on the jobs number. As long as the Dow doesn't take out 165, 166, we're going to stay short. We might get a little reversal. What we are looking for is a break of 148. Which would be 14,800 on the Dow. And we see much lower prices. Do you know that the Dow could come down to 120, or the diamonds 122, and the uptrend still be in place? That's how extended we are. Takes out all of the noise. Let's look at what the professionals look at. When the professionals look at the Dow, they look at the cash Dow. Where did our subscribers begin to get short? When the Dow broke 16.2, right here. Did anyone else tell you that? The Contrarian News Bubble channel? Another sell, 15.7. Look where we are, right on the trend line. Dead cat bounce. We're not going to begin to cover unless the Dow takes out this area up here. Maybe it sees it tomorrow, maybe it doesn't. Maybe this is just, we bounce up in here at 15.7. The media gets everyone excited. We reverse back down and blow through and come down here. Look where this is showing, 14,950, 1480. This is where we're we're going to begin to take what? Half off, because we're short from up here. Let's look at the SPYs. This is the SPYs. High pole warning up here. Reversal, we got short. We're still short. Little support. We expect to bounce around 172. We expect to come down here around 166, 164. We would expect a bigger bounce down here. So if it sells off tomorrow, we're already short. We would not recommend shorting into tomorrow because we think the bounce will come around 168 or so and then up. The real sell is going to come when it breaks 164 or from another formation up here. The SPYs can come down to, folks, believe it or not, 138, 136, and the uptrend still be in place. That's how far extended. Now let's look at what the pros are looking. This is the S&P cash. High pole warning, reversal. We got short up here around 1820 with a stop up here. We caught it. She broke. Sell. Dead cat bounce. Expected. This cannot generate a new buy order unless 1860 is taken out. 1860, don't get sucked in. This is going to hang up here. 1810, major resistance. She reverses down, takes out 1740, down we come. This is the area that we've been looking at, 1620. This is where the major bounce will come. This is where we're headed, folks. We think. And this is how we do it. Let's look at the Russell. This is the IWM of the Russell. Sucked in the shorts, a breakout. This was back months ago, and here's the run up. High pole, reversal. The real support for the Russell is around here around 100. This could be an area to cover. Anything above 118, certainly cover. But we think much lower prices to come. We'll probably get down here around 94, 95, and that's where we'll begin to cover. We'll get a bounce and see where we are. And ultimately, we think this trend line will get challenged, but we'll see. No noise, no media, no comments. We know what we're doing. We know precisely where to place our entries and our stops. Let's look at the Qs. This is the NASDAQ, the QQQs. Look at this high pole warning. This is beautiful. I just let it run up. When it's an X's, it's going up. As soon as she reverses, we got short at about 86. Where's my stop? 90. So I stay short. We come down. We can come all the way down here. The support really is at 75. The real break is at 69. Granted, I don't think the Qs are going to come straight down and break 69. That's not what we have experienced, and that's the sort of thing that we go over on our DVD. The specific patterns where people place their stops, where they place their sell stops, their buy stops, what is the emotional aspect of these various patterns. But this is in a sell mode coming down. Folks, I hope this is helpful. At Stock Market Caddy, we are not brokers, we are not financial planners, we are basically running a private club of sorts. We like to teach and hang out with like-minded folks. If you like this sort of thing, tune us in. We're going to talk to you about point and figure. We're going to show you our algorithmic systems on Sunday nights. You've seen nothing like it. Trust me, nothing like it. Years ago, well, for 25, 30 years, I used to teach surgeons how to do surgery. Trading the markets is not surgery, but if you want to know more about us, you can go to the website, but we treat it as if it is. We keep it simple, we keep it precise, and we're all about the results, getting the best outcomes, right? So I hope you've enjoyed us. It's free to follow us on Twitter. And if you like what you hear, you like what you see, we try to put out different things. All I ask is, not everyone can afford to subscribe. I understand. But just recommend us to 2 or 3 folks. We will try to educate you and as best we can so that you can turn off all the noise. I hope it helps. Good luck.